This week on the Retirement Quick Tips podcast, I'm recapping the stock market, bond market, and economic climate of 2024, and then we're looking ahead to 2025. So today I want to take a few minutes to just talk about what happened and kind of summarize the drivers for continued growth in 2024. In 2024, when you look at it from a stock market, even bond returns, the economy, it was just another banner year overall. So stocks rose 23%, actually a little bit more than 23% for the year. And that was due to a resilient US economy. There was a lot of excitement over artificial intelligence. And I'll come back to that in a minute because you saw some of the biggest growers stock-wise in 2024 were companies that were really benefiting from artificial intelligence. Then we had record profits overall for stocks in the third quarter. And then we had a few interest rate cuts from the Fed, and that helped to juice growth in the economy and in the markets, and also helped with bond prices as well. So no matter what, if you were a fixed income investor, if you're a stock investor, if you're not much of an investor, the economy was growing, the job market, now unemployment was going higher, certainly yes, but overall, the labor market remained pretty stable. So most of us financially, except for the beatdown that we all have seen from inflation, aside from that, most people were in a pretty good position, and certainly most investors saw growth. In fact, for 2024, that's the second consecutive year for 20+% growth in the stock market. And that hasn't happened since the late 1980s. Happened in 97, again in 98, possibly in 99. I know the returns in 99 were close to 20%. I don't remember if it went up. But anyways, late 90s. So it's been a pretty long time since we've had back-to-back years of 20+% growth. And I think that's one of the main takeaways from the last couple of years, especially in 2024, is that when you look at the growth that has happened, there's always this reversion to the mean, or you have a couple of years of strong growth and all of a sudden you're like, that's your new normal. That's what we expect going forward. No. There's going to be an adjustment at some point. We saw that in 2022 when the Fed started aggressively raising interest rates and the stocks took a nosedive, bonds took a nosedive as well. So don't think that this robust growth that we've seen is going to continue. I am personally optimistic that we will have growth. I think there's a lot of good factual reasons to back up that idea, but 20+% year over year growth 2 years in a row, not normal. And if that's any indication, that hasn't happened in the last 25, almost 30 years now. So don't expect what we've had for growth over the last couple of years to continue into 2024. I'll talk more in future episodes about looking ahead to 2025 and what some of the trends mean going forward. But I want to focus today on recapping the year. Another interesting trend in 2024 was that more companies in the stock market participated in the growth compared to 2023. Now, if you follow stock news at all, you've probably heard of the Magnificent Seven. These are 7 companies. They're the largest, most well-known. Many of you can name and know nearly all of them. They've been the drivers for growth in the stock market by far for the last several years. And one of the concerns here is that these 7 stocks in 2024, they were responsible for over half of the market gains. So if you didn't own these 7 stocks, or you didn't own an S&P 500 index fund that has massive weightings in these stocks, then you didn't participate as much in the growth. You still saw gains, but they were maybe more like 8-10%, not 23% if you didn't own some of these Magnificent Seven stocks. And some of them were up well over 100% for the year. So we have a dominant group of just a handful of stocks that is driving a majority of the returns in the market. Now, the good news is even though these 7 stocks were responsible for 55% of the gains this last year, it was 63% of the gains in 2023. So they were still big drivers for growth, but if you look at sort of a broader index of stocks that's more equally weighted and not just concentrated in the Magnificent Seven, you see that broadly more stocks participated in growth this year. Most stocks were up this year in the S&P 500, and the average gain was about 10% across the board, across those 500 companies. So this really points to more robust growth throughout a variety of industries, sectors of the economy, not just concentrated in the largest tech companies. And that is a good indication of health for the overall stock market. It's one of the reasons I'm optimistic. But the caution here is that if you have a target date fund, if you have an S&P 500 index fund, most people don't realize how concentrated they truly are in some of these Magnificent Seven stocks and some of the other large components, because they're all market weight indexes. The S&P 500, there's 500 companies in it. Actually, there's like maybe, I think 494. I don't know. It's like around 500 companies, but it's not even split among those 500 companies. The largest companies is a market weight index. So the largest companies make up the biggest weight. And the problem now is that we've had years and years and years of tech stocks that have grown to be bigger and bigger pieces of this pie. And so if you don't rebalance, if you don't diversify, you end up with a portfolio that is very concentrated in just a handful of stocks. And that's one of my biggest concerns, is that even though there's AI and excitement over AI, and that's a growing area, and these tech stocks are benefiting from it, the valuations, in my opinion, they appear to be a little bit stretched, where now these companies are looking pretty expensive. And I think it's hard to justify further future robust gains similar to what we've seen over the last several years. So I have concerns about that. The takeaway here is, when it comes to your stock portfolio and looking at what happened in 2024, use the high watermark. Your portfolio right now, if you're a stock investor and you're pretty well diversified, I'm willing to bet that it's pretty well near its all-time high watermark value. It's a great time to revisit your allocation, look at how well your portfolio is diversified, sell off things where it's concentrated in certain areas, and make sure that you are diversified, not just in a handful of the largest US tech companies, but broadly diversified in other areas as well. All right, so tomorrow, we're going to look ahead to the economy. So I'll recap a little bit what the economy, what some of the drivers were for growth in 2024, and then we'll look ahead to 2025. That's it for today. Thank you so much for listening. My name is Ashley Michike, and this is the Retirement Quick Tips Podcast.